name's Ed Merriman, your Maryland mortgage man. For going on 15 years, I've proudly been serving Maryland citizens with their mortgage and home financing needs. Last week, we discussed what happened to your mortgage once you sign on the dotted line at your loan's closing. There are a lot of players that are involved in the secondary mortgage market, and your mortgage passes through a lot of hands before it ends up in its final place. If you missed it, go to MarylandMortgageMan.com and you can watch it there. This week, we're going to figure out why there are points on the front of our mortgages again. For the last several years, we usually didn't see that, but all of a sudden, they're back. To begin our discussion, let's define what the term points on a mortgage means. Points are an expression of a percentage of your loan amount. 1 point equals 1% of your loan amount. So if you paid 2 points, it will be 2% of your loan amount, and so on. So there's what points represent. But what purpose do points play in a loan transaction? Let's look at that. Lenders get paid in 2 ways for a loan. One way is over time, and that is through yield spread premium, or YSP. That is when the investor receives payment for an interest rate over the course of a loan because the loan is priced above the par market rate. This is how most loans have been priced for over a decade. The investors were not concerned about the mortgage being paid off early, and they were willing to take the gamble of holding on to the loan to receive their compensation over time. The other way that investors get paid is by points. This is when the investor gets their compensation for the interest rate up front at settlement. So instead of the investor getting paid over time because of the slightly elevated interest rate, the investor gets paid all at once in upfront fees that are part of the settlement cost. Sometimes points are referred to as discount points because the points actually purchase an interest rate. Let me give you an example that will illustrate YSP versus points. Say that the flat market rate for a 30-year mortgage is 3.75%. If the lender offers you 4.25% over the life of the loan, the lender will receive an additional 2% in yield spread premium over the life of the loan because of the 0.5% in the increased interest rate. The way points would work is that instead of elevating the interest rate, the lender would offer you the 3.75% or par market rate and charge you 2 points at settlement. So you see that YSP pays over the life of the loan, while points pay all at once at the loan's consummation. So why are points suddenly showing up on our refinances when we haven't seen them before? It is totally because of lender and investor uncertainty. The lenders are in uncharted waters because of the COVID-19 virus and the CARE Act, just like the rest of us. Interest rates, while historically low, and just a side note here, 15-year mortgages are priced incredibly low right now. If you are living in your forever home, it is a good time to consider that. And interest rates are fluctuating more than normal. The CARE Act has granted consumers forbearance on mortgage payments without any provable hardship, and it is yet to be seen how that is going to affect the secondary mortgage market. And we are not sure how the economy is going to react to starting up again once we are given the green light. All of this has made a unique mortgage environment where investors are not willing to wait to be paid for their investments, spelling out YSP that is reasonable has evaporated from the mortgage market because investors are worried about the dreaded early payoff. Whether that occurs because of quick turnaround times with refinancing, defaults, or forbearance, the risk is too much and too undefined, so they are demanding to be paid upfront with points so they get their profits right away and they do not have to wait for profits over time with consistent payments. This is not a huge deal in most refinance situations since points can be wrapped up in your loan amount. For purchases, though, it can increase the cost of the money that is necessary to be brought to the table. So, it is a great time to take advantage of the mortgage market. Rates are very low, particularly again on that 15-year mortgage as of today. Call me and I can review your scenario. On purchases, if you need to buy, let's do it now. It's a great time. And in uncertain times like this, cash is king. So if you're looking for a cash out refinance, by all means, pull the trigger. If you're considering any of the above options, I care, and I am here to assist you. My contact information is on the screen. Until next week, this is Ed Merriman, your Maryland mortgage man, wishing you good health. Stay at home, make the best of it, and I will see you soon. Take care. Bye-bye.